Is Navitas a bad investment or a great long-term investment? It's trading around $14 at the time of this recording. Now, in the past year, it is up 485%. So when a stock goes up this big, we get curious and we do our research, and I will do a video on it. Now, the growth of Navitas is terrible. Let me now show you the margins. The margins are also bad. This means the market is excited about the future and not the present. So is it worth if I put money into this at $14? This is what I'm going to cover in this video. In doing so, I will talk about the business model, financials, valuation, and risks. Guys, before I move on, I'm just gonna ask if you can help me get to 100 likes for this video. Let's get to 100 likes, smash that like button, subscribe to the channel, and let's continue growing together. Now, I want to clarify, this is not financial advice. I'm not qualified to give financial advice. This is simply my opinion. Please do not buy Navitas stock based on this video. Please do your own due diligence. At the time of this recording, I do not own any shares in Navitas stock. First, I will cover the business model. Navitas is a pure play power semiconductor company focused on gallium nitride and silicon carbide technologies. Its chips are used in AI data centers, electric vehicles, mobile fast chargers, solar micro inverters, and energy infrastructure. Now, Navitas does have competition. Key competitors include Texas Instruments and onsemi and more. Let us now move on to the financials. As we already know, Navitas is trading at $14 with a market cap of $3 billion. Q2, the revenue was down 29% year over year. For Q3 of 2025, the revenue guidance is 10 million. This is really low for a $3 billion company. Now, the partnership with NVIDIA has spiked the stock big. Navitas is supplying power semiconductors for NVIDIA's high voltage direct current AI data center architecture. Now, this partnership is seen as transformational, positioning Navitas as a key enabler of the next gen AI infrastructure. Now, this sounds good, but it all depends on how much can they make with this partnership. This is a key for the stock price. Before I move on to the valuation, I will talk about the balance sheet. The net cash position is 153 million. This is good, and I can say this is the only good thing for Navitas. So how much revenue can they make by 2030, which is 5 years out? In other words, can they still grow? Now, there is no official guidance available. Now, Navitas estimates a total addressable market of 2.6 billion for its 800 volt AI data center power electronics. They can potentially make 250 million in revenue by 2030 on the high end for the AI data centers. This assumes they can capture 10% of this market. Now, let's remember that they have a ton of competition, and the total addressable market is usually an optimistic number. I'm going to add another 50 million in revenue for its other segments like EVs, energy infrastructure, and more. Let me now talk about the stock dilution. Their share count is at 188 million by June of 2025. But on a fully diluted basis, they have over 213 million shares. Their balance sheet is probably the only good news. Their net cash is 278 million, thanks to the heavy dilution. Now, let us see what they will do with this money. Now, what about the valuation? I am assuming 300 million in revenue by 2030. Since their gross margins are not attractive and they are under 30%, I am estimating 50% net margin, and I think this is difficult to achieve. Current outstanding shares are about 213 million. I am estimating more dilution to 250 million in the next 5 years. Since this is a low margin, high competitive industry, I cannot assign more than 35 earnings multiple. Based on this, the 2030 stock price would be $6. Based on the current price of $14, This is a loss of 56% in 5 years. This tells me that the stock has a lot of hype baked in, and the fundamentals do not match at all. This looks like a meme stock to me. But if there is a believer in NAVITAS out there, I will show you a bonus valuation. Make sure to smash that like button and subscribe to the channel. Now, this bonus valuation, I do not believe in at all. For the stock to just double in 5 years, the revenue should be $1.38 billion. This requires Navitas to capture 50% of the total addressable market. Yes, 50%, which seems impossible with the kind of competition. Margin has to be 15% or higher, which seems unlikely. The heavy dilution should not happen, and they should stay at 250 million shares. Multiple has to be at a premium at 35 or more. If all of this happens, then there is a chance for Navitas stock to double. I will talk about the risks. The first concern is execution risks. Then there is issues with making profits. Insider selling has been super high. Competition from large players. China-related tariff risks are present with silicon carbide inventory write-downs. So Navitas is pretty much an extremely high-risk play. So as of right now, I am staying away from Navitas stock. Let me know what you think. Let me know your thoughts in the comments. And thank you so much for watching.